Okay, everybody, good morning. Thank you for joining me. Hope everybody is doing well wherever you are around the world. Good morning from the Baltics here. Staying strong amidst increased drone attacks on Ukraine, trying to support them. Russia surpassed 1 million casualties during this war. It's unbelievable, and if anybody thinks they're just going to let up for no reason, they're wrong. But anyway, I get sidetracked always. So I just I just published this base money update, deposited it into the Twitter sphere for Q1 2025. Usually I do this, or I think I've always done this around 9 a.m. Eastern Standard Time in America, because that's when people say you should publish. But I'm just tired of all these rules anymore, so let's do it. Morning Europe time, 9:30 London time. We can review. So let's get to it. First of all, it's here. If you're looking for it, it's pinned to my profile. Okay. Update number 28. For 28 quarters, I have been doing this. This wraps up 7 years, in fact. Number 29 will be the start of the 8th year. Pretty wild. It was 2018 summer was when I did it. So it's completion of 7 full years. Kind of interesting, right? Been doing these mostly on Twitter, as it was called back in the day. I do repost them on my website, summaries, and on Noster as well. Let's just go through it, okay? Since it's, since I'm here and, we don't need to wait for morning U.S. time. Let's just talk a little bit about it. For long-time followers, you know exactly what this is, but I'll explain it again. Base money, it's called reserve money, outside money, high-powered money. It is the only money supply that's comparable with Bitcoin, okay? You find it precisely on every central bank's balance sheet. It's a liability. It's how they create money ex nihilo, okay? It's comprised of two things. One is physical currency. Second is bank reserves, all right? Now, I've gotten into debates often with people about this word physical currency, because sometimes, when we start to compile this stuff up in dollar terms, and then we start to compile Bitcoin's market cap in dollar terms, you can really make comparisons. And indeed, that's what I've been trying to do here for the past 7 years. Currency is what they used to call cash back in the day. They still do, depending on who you talk to. But, in the old textbooks, if they weren't calling it cash, it was called currency. That is the physical stuff that is printed from the central bank. In the U.S., it's true that the Treasury still has authority over the coins, but the coins don't have any silver or gold in them anymore, so it doesn't really matter. The notes are obviously where most of the value is, but in any event, if you added up all the physical currency in the world, it's this. It's about $9.3 trillion. That's everything. Dollars, euros, yen, physical yuan, Brazilian real, the pound sterling, Argentine pesos, Colombian pesos, so on and so forth. Top 50 currencies in the world, it goes drastically down from there. I'll expand this list eventually, but that's what it is. There's 9.3 trillion in currency or physical cash and 16.9 in bank reserves. All right, so money does not need to be on a blockchain to be digital. And it also doesn't need to be digital, in fact, to be a bank reserve. Back in the day, this was just a ledger entry at the central bank. But this was the main account that each bank held with their central bank. Okay, so this is how, at the end of the day, banks clear liabilities with each other. It's the master account. All right. How much of that is there in the world? 16.9 trillion. You might not think that's a lot compared to if you hear things like $100 trillion M2 money supply, which again is not the broadest. You got to go to M3 or M4. US hasn't published M3 since 2006. I do have a revised version of that, but it's a separate analysis completely. None of that is analogous to Bitcoin. These two things together are analogous to Bitcoin. All right, 26.2 trillion was the latest update. That's actually up from Q4 2024. So I thought this would actually be lower. Turned out to be higher. So they're a little bit turning the corner, perhaps easing up on. And when I say easing up, I mean printing more compared to what they've been trying to do for the last 3 years, which is reduce all of the excess money printing that was done during the pandemic. Okay. Before the pandemic, the monetary base was 20 trillion. At the height of the pandemic, it went up to 30 trillion. Now it's down to 26.2 trillion. Got this little tree chart, which I'll switch over and show you a better view here. Let's look at this. Let me make sure. All right. Actually, I need to put myself on here, don't I? It's not exactly spread on the window, but that's all right. I can even do that right now. Spread it out a little bit for this one. All right. And let's put myself there. All right. No, need to take myself off, don't I? It's too much. Okay, this is a little tree chart here. This is another way to see where the money sits and how it's valued. Okay. So over here on the left, with obviously gold is the biggest one, these are no issuer monies. Okay, so of course that's going to be gold, silver, and Bitcoin. Bitcoin first passed silver back in 2021 during that run up. Right now it's about 1.1 trillion, 30 billion ounces. Sorry, that should be a B, billion ounces, 30.9 billion ounces worldwide, valued at 1.1 trillion. Gold is about 6 billion ounces, valued at 19.84 trillion worldwide. And then here's Bitcoin, 19.88. That's million Bitcoin. At roughly 2.1 trillion, depending on the price. This was $105,000 Bitcoin. I put, we're a little bit higher than that right now. It's often when you post something in this world, it's immediately irrelevant, or not irrelevant, but out of date. Anyway, you get the idea. So this is both historical and perhaps future money in Bitcoin in relative size. You can see the gold is still the king here. Half of this gold is in jewelry form, by the way. And only about 4 trillion of it is in central banks, which is a record high because of the gold, gold prices at the moment. All right, so then you have the big four issuers. Okay, this is the size of their monetary base. This is the only money supply equivalent to Bitcoin. Dollar, 5.78 trillion. Yuan, $5.19 trillion. The euro, all right, which covers 19 nations, 4.96 trillion, and Japan, 4.36 trillion. So this is over 80% of the fiat total. Right, it's a very nice 80-20 rule here. And the next one up is the United Kingdom. Bitcoin passed the sterling at the start of this year. Pretty incredible. Only $1 trillion. It's 800 billion pounds. Unfortunately, I didn't get my units right here on this chart, but that's all right. Thought I'd be interactive with you a little bit, but sometimes when you rush to get it out. Anyway, 800 billion pounds, it's $1 trillion. You got the Swissy up next. It's the same, $500 billion, $580 billion worth. That's 520 billion francs worth. All right. And then India as well. 0.57 trillion or 570 billion dollars worth of rupees out there. All right. You got Russia, Hong Kong, Brazil, Emirates, Australia, South Korea, Taiwan. Okay, Canada's in there. But I'll move the mouse off so you can sort of see. This is the relative scope of these things. We'll go a little bit into the weeds as well with some of these numbers, because sometimes when I do these updates, I don't show all the proportions. It is kind of interesting, so at least I think. The first takeaway here is, at least I think that you should have, is there's a lot of currencies. Right? This is only the top 50 currencies. There are many more, in fact. And nations want to be in charge of their own money printing. They like it to cover deficits. The United States is no different than China. China is not a fan of Bitcoin because they know how uncontrollable it is. Remember, this is just all available gold. All right, so this 5.9 billion ounces. It'd actually be 7 billion ounces mined throughout humanity, something like that. You take off about 1 billion to get to industrial. Sorry, to 1 billion industrial gold. All right, so it's not nothing. It's constantly churned through the industry and in tech and electronics and the old dentistry as well. It's used still. But 5.9 billion ounces is utilized. And as I said, half of that is liquid jewelry. So it's not like it's monetary gold, but it's still there. It's still counted up, and we can still put a value on it. All of this, when you look at it, again, is why every quarter, every time I talk about this stuff, I'm continually reaffirmed in the idea of Bitcoin moving and growing in power, and all the other stuff grows in exponential. I'm an empiricist. I like to look at the data before spouting off, and this is what the data tells me. And so I'm not a believer that, as much as I wouldn't complain, I'd be happy to be wrong about this, but the hyper Bitcoinization idea, it assumes chaos, really, because you still have a lot of other value here, and we can account for it, and we can see how it grows over time. So we'll talk about it. You might also have a question about how much gold backs these currencies, okay? And that is the right question to ask, the old backing question. First of all, no currency has ever been backed 100% by gold. Never, not once. In some old cultures, and I got to put all this data together in a presentation at some point, it's possible that the currency was backed maybe 30 or 40% by gold in the vaults. But as George Selgin has pointed out in his research, I mean, you can get down to 1 or 2% gold in the vaults to currency and deposits outstanding. Deposits are not included in this, but nonetheless, deposits are not here. M1 deposits, those are not included in here. But even if you looked at base money deposits, it's not ever been 100% backing. Right now, as I said, there is no silver in central banks, like a slight bit to be accurate, but it rounds to zero, basically. And we're getting close to $4 trillion in gold, which is pretty wild. When I get to the comparison, the Bitcoin dominance index that I've had, we've already talked about this a lot for longtime viewers, but with Bitcoin moving as a power curve versus all the rest, gold, silver, fiat money moving as an exponential curve, you can add all of these numbers up, okay, to compare with Bitcoin, but you should remove that gold backing because it's already counted here, right? So United States has a weird accounting. They're the only ones in the world which don't do mark to market of their gold. It's if they have it, there's $800 billion worth of gold behind here if they have it. European Union, actually, I don't know off the top of my head. I can check, but there's going to be no more, let's say, than 15% on average, I guess. And that's simply, 3 to 4 divided by 26, which is the total base money. I will check it actually just to tell you on the fly. So, sometimes I've shown these trees. It's kind of just another way to look at it. Actually, this I didn't think about. We can break out into the smaller issuers. Here, this is helpful. We'll come back to the gold idea, but here's the smaller issuers. All right, so UK, big portion of the pie here. Swissy also big. And then down we go. India as well, of course, big. Russia's balance sheet is about twice this size. They have a huge portion of reserves. Remember, reserves are assets. So assets backing this liability of $300 billion worth is assets, and 200 billion of that is in Euroclear. So that's what they're arguing about right now for the Ukraine war. And down we go. Hong Kong dollar, Vietnam, Hungary. You can just see the different sizes. Sometimes you even have a union inside of here. For example, here, West African CFA franc. This is an old French colonial currency, but it's still pegged to the euro. $20 billion worth of monetary base total for many nations here, actually. So it's still pretty small, as is most of the economic data for sub-Saharan Africa. Iran even is about the smallest at the moment. This is trillion reals. So 12,729 in native units. It's actually 12.7 quadrillion reals is sitting in the central bank of Iran. That's $10 billion worth of currency. Norway is also small, which might surprise you, but the sovereign wealth fund of Norway is massive, right? $1.5 trillion worth or something of their sovereign wealth fund. So 20 billion in monetary base is just kind of play money. Norway tries to get away from cash anyway. Norway and Sweden are the kind of exceptions. But the physical cash portion, remember, which is about a third of these values in total, is still growing. So no matter, again, I'm an empiricist, do as they do, not as they say. There still is, a growing pie of this physical currency. And then if we wanted to zoom in on the no issue, again, gold, Bitcoin, silver, here's the breakup just of those. Gold is just still huge, still the elephant in the room. But if we put them all back together, just to say it again, we can count up what is the remaining size of currencies or base money in the world. All right. And if you look closely, you're only going to see 5 bigger than Bitcoin. Obviously, gold number 1, United States number 2, China number 3, Euro number 4, Japanese yen number 5. And that's it. Bitcoin passed pound sterling earlier this year. So here we sit. No longer can this be taken for granted or just joked about. It's an unbelievable rise. Here is the lifetime CAGR, or compound annual growth rate, all right, of these money stocks. Okay, so this is the real or true inflation rate of money. It does not mean that this is what prices do on average, but it is something to look out for, all right? Because with prices, you still need to factor in demand, ceteris paribus. It's an impossible task to do. That's why people try to measure prices. But this is the supply growth of base money. Sometimes I rank these, but now these are actually ranked by, I mean, sometimes I rank these, by size, like this would be last. Argentina and Brazil are always last. This is ranked in monetary base size. Okay, so here's the US for number 1, 8.8%, China 14.2, Eurozone 10.2, and Japan 11.3. Pretty big numbers. Bigger than what you typically hear of the central bank goals of 2 to 3% or 1 to 2% price inflation per year. Again, this is not price inflation. This is money growth, but they're big numbers. The global average, okay, which is just across the line here for everybody. It's the global weighted average is 12.7%. It's the line. The big ones, obviously, Argentina and Brazil. Okay, Brazil is not that bad right now. Argentina's still kind of bad, but you can still do this calculation. Brazil and Argentina have both been through like 5 or 6 currencies in the last 50 years. You can still do this calculation. You just have to, reset the currencies, look at the growth rates. This is like a scorecard number. This isn't exactly what the people of Brazil are feeling right now. Argentina's not great, although Malay's done a decent job, but it's kind of like a scorecard number. Turkey as well, not a great scorecard. They've had a lot of high inflation over the past few years. Let me pull up the stream, see who's joined. Hi, Anders. Good morning. Thank you. Yeah, I'm thinking that it is just, it's a lot of noise. I try to stick with the facts. Yeah. Money growth is important. Money growth is brass tacks to me because you don't have to worry about what they say. Just look at what they do. So I think it's a really good benchmark. Good morning, Daniel. If anybody wants me to stop, good morning, Tim. Yeah, so Norway, I got to keep giving the disclaimer for Norway. It is high. Wait till you see what they did in the last year. It's a very small amount. Okay, Norway's like consistently ranked last. Let's go back. Let's zoom in on the smaller issuers. Norway's way down here. All right, it's $20 billion or 200 billion kroners. Right, it's monetary base size, and their balance sheet includes the sovereign wealth fund. So I don't exactly know why. I don't know if it's just big banks like moving money in and out of the sovereign wealth fund versus their holdings at the Norges Bank, the Bank of Norway. But it's not really. I don't know. I don't know what to say about Norway. It's interesting, right, that it grows a lot, lifetime 30% a year. But they also have a huge value that's not included here that no other central bank actually has. And interestingly, the other sovereign wealth funds, like in Saudi Arabia and the UAE, they're not on the central bank's books. They're just not. But Norway puts their sovereign wealth fund on the central bank's books. So it's kind of like it has a lot to do with that. I can't exactly explain to you other than the sovereign wealth fund kind of gets in the way. Banks, I presume, are moving money in and out of the sovereign wealth fund into their deposit account with the Norge Bank. But it is, yeah, it is. It's jumpy. It's the most volatile monetary base, in fact. But like I said, it's not that big, and it also shows that uh, I think it's also a good example of a small country and a small currency is actually not necessarily needed to hold that much value and still have a productive economy, right? I mean, perhaps it's a unique situation because Norway, for whatever it is, 40 years has been putting money into this sovereign wealth fund, oil money that is, they're trying to move it into green energy now, but it's oil money, obviously. But we'll see. Trump wants to make a sovereign wealth fund for the United States. Maybe something will happen there where the dollar monetary base becomes less important and oil becomes more important. But it's hard to say, I mean, because Norway as well, being so small, like I'm sure for their international reserves that are inside the sovereign wealth fund, there's a lot of dollar. In fact, I know that there's a lot of dollar-based assets. So, it's not like most other countries demand Norwegian kroner. So anyway, I'm probably going on too long about this, but it's most countries don't demand the Norwegian kroner. Most countries do demand the dollar or the pound sterling or the Swiss franc. Let me see here. Money growth actually translates to price increases or lost productivity. Yeah, I think you could. I think you could, but that is, because I have the data from IMF, but I used to say I was never going to measure prices, right? Because it's a very arbitrary thing. IMF is going to measure it different than, the local Turkish authorities, and vice versa for every other country in the world. So I'm just not a huge fan of doing CPI indices. And anyway, there's probably other indices that are better. Like one I would say, if you haven't heard of this, but what is it? The Chapwood Index. That's pretty good. And let's just pull it up just to show you. This is United States based, of course. Sorry, this is wrong. Let me just do it here. No, let me do it here. Sorry for the dead time. So here's Chapwood. It's one example. Obviously, you're seeing like numbers here. If you just even glance at this, it's way different than what the Federal Reserve will tell you. And this is U.S. based. It's U.S. based. So there's so many ways to do inflation, like price inflation. I just don't. I don't know. It's a rabbit hole that I haven't gone down yet, but maybe I will in the future. Good morning, Dad. Yeah, football nations. That's a good point. I should go back to that. I should. I should rank by football prowess. Of course, the United States has an insane definition of football, but these are the big four. Roughly equal. They've all been bigger at different times. For a lot of times, Japan was the largest. Sometimes China was the largest, sometimes the euro was the largest. But this is where it sits at the moment. Okay, so here it is again. Here's all of them. Long-term growth, it looks like this. And this is a per year number, exponential number, per year number, 12.7% per year. Now, let's look at the trailing 12 months, and you'll see some craziness. Okay. So here's Turkey. They've been just flying with their money supply, 70% year on year. Argentina, 145%. I'm putting a low minimum or capping, so to speak, the minimum. So some of these go down, like United Kingdom went down 10% last year. Australia went down 24.8%. Canada, 7.7%. Indonesia, 5.3%. The average right there is 1.6%. Global average, weighted average. And so they've actually, and this is the theme that I've talked about, and it's in the report as well, is we have, since year-end 2021, so 2022, 2023, 2024, and into 2025, they've been trying to back up from that 30 trillion that capped the markets in December 2021. So it's like messy. This is another thing why I think it's interesting when they talk about coordination. I think they try, probably the European Central Bank and the American Bank try to coordinate the most. But you could see that it's just madness for everybody. United States is negative 0.7. China's up. Europe's down 7.7. Japan down 1.6 for the big ones. UK down 10.3. So again, it's just to show you it's wacky. Like, imagine trying to correlate this with every country's prices. It can be done, but it's just as difficult. And then you can also say that perhaps prices are a lagging indicator from this. So maybe we will have, although Donald Trump doesn't want it, maybe we'll have prices fall more and more in the United States. And then they'll have to reverse course and print more. But Turkey's been really high for a long time, 70%. And then Argentina, look at that, 145% year-on-year monetary base growth. It's crazy. Okay. Yeah. So we'll leave it there just with the money growth. We can come back to that if anyone wants to see it. But this is, again, the survey. This is how it looks. Let me switch views again. Let me go to this one. So we have this in the... I copied and pasted this in the article. This one as well. This one as well. And then we have this one. I'll just pull up the chart. So again, to remind you, we're extremely low historically. All right, if we would draw this trend. Yes, this was a massive bump. Remember, it was 20 trillion, right? See the green in the tooltip, world monetary base, 20 trillion. It went up to 30, and it peaked here, 30.5 trillion. Okay. So from the start of 2022 till now, they have decreased it. And we're in literally the first percentile around the trend. So really, really low levels of money print relative to the trend. And these are reasons why, again, I just keep saying, take comfort in these numbers. There's nothing else here. Yes, we have gold. Yes, we have silver. Yes, we have Bitcoin. But there's nothing else that is a comparable number to Bitcoin that you can put on this chart. This is literally everything. So all the hype in the stock market, bond market, even the Bitcoin bond and treasury market. Um, we're at very low levels of central bank money. Now, you could have maybe a case like we had here, right? With the gold market was topping. There was a lot of money printing relative to the trend at the time, although the all-time trend was actually where the red lines are, so it was even higher. Okay, so imagine the evolving trend is between the red lines, and then we did go sideways here for, let's count it. It was about January 1980 was the top. There was a double top as well with gold, but let's say this is this is fiat money, but still with gold at top tier in price. So around $600 billion, which is hilarious, isn't it? $600 billion was the top in January 1980 with fiat money. And it went sideways for one, two, three, four, five. Yeah. 5 years. So at least in the modern era, which is all that I have here, this is the best example of where we are today. With 5 years of going sideways, and from here, we have gone down or sideways since here. All right. So this was the top. So 1, 2, 3, and we're in the 4th year. So I don't know the answer to this question. I don't, this is the most important question. I don't know how much longer this goes, but it is really low comparatively. This would be the only, as you can see clearly, this is the only correlation. I'd give it a year. I think within the year. Also, you have all the geopolitical headwinds, and when I say headwinds, I mean craziness that could make them want to print more. The trend line itself is $35 trillion. And we're only at 26. All of these things that I just said are, again, further, I think, proof or further to the idea that whatever is happening with Bitcoin is still, in fact, independent from what central banks are doing. Yes, December 2017 was all-time high for money print, all right, at the time. Yes, with 2013 as well. But those highs aren't necessarily something way different from the trend. Mostly Bitcoin was conveniently born, okay, in this 2008, 2009 period where we obviously had major money printing that really pulls this black line up. But again, it depends on which central bank you look at and what you're talking about, because remember, I've said many times, the Federal Reserve, the dollar central bank, was decreasing the money supply all from 2014 to 2019, basically to 2020. But it is true the rest of the world was increasing. But again, regardless, I don't see, I see this money print as part of the backdrop, but I just don't see it as part of the adoption power curve that we see. And I'll bring it up again in the future. Okay, so that is the chart. We can go back to the article. We'll save this. We've talked about, I was just talking about this. We'll talk about this more. Let me see if you can't read this. I'm not sure if you can. I think it's big enough. But I have to zoom in, don't I? So this is, you can print this out and read it easier in the actual file. These are the 50 currencies and when Bitcoin passed them. All right, so you see here that top 4 still have not been passed. But sterling was passed in, oops, this is wrong, unfortunately. Oh, no, this is right. Sorry, I was thinking of silver. Yeah, this is correct. February 2024. It was all fine. Sterling, when sterling was first passed, okay? Sterling now is $1 trillion. And Bitcoin passed it when it was at 1.1 trillion. All right, as we know, Bitcoin is over 2 trillion now. So every currency is, even if it's higher now in value, Bitcoin is still larger than it. So it's pretty easy run, frankly, for Bitcoin. So it's kind of interesting if you go back and look at these dates. What you'll notice is 2017 was a big year. Summer of 2017. ICO boom was going crazy. Ethereum, ETH heads were loving it, but Bitcoin was quietly surpassing most central bank balance sheets in the world. 30, 40, 50, 60, 70, 80 billion. It was just passing them up. It was really only the ruble, the rupee, the Swiss franc, and pound sterling, these sort of mid-major currencies that took longer than 2017. One other thing I wanted to point out, and I think it would be fun for me. I don't know if some of you guys think this is interesting. I take this info from the IMF. They do a annual survey of global currencies. It's called like the exchange rate regime currency report or whatever. This is the report from 2023. It was published in December 2024. So it takes them a lot of time. It's like almost when you publish something, it's out of date. But this is what it is. The differences between these things, like say free floating versus floating, are capital controls. And I've been looking at this report from the IMF for years now, and they're getting better actually of detailing out sort of in column form, like all the different capital controls. I think it would be interesting just to look at how many capital controls there are per currency, because it is a lot. I don't have it here. I didn't summarize it, but it's just simple things like whether you can withdraw cash. Are there withdrawals on withdrawal controls on SWIFT, central bank, approvals required over this amount, so on and so forth. Bitcoin has no capital controls. Even gold has capital controls. So I think it will be interesting to summarize that for you at some point. But anyway, it's just kind of funny to look at all these different exchange rate regimes. Basically, free floating and floating are the freest, that your currency can be, least controlled. Then you have here, like, you see this conventional peg for Saudi Arabia. UAE has it. Also, Hong Kong is a currency board. Those two I'm classifying as the most controlled. All right, because then you're pretty much fixing against the dollar or a basket of currencies. And in between that, you see others, like China here is other managed arrangement. There is crawl-like arrangement. There's a crawling peg. Those are sort of in between, some sort of a managed. So if we go back now to the all-time chart, I'm not sure this is going to show up. Yeah, this is, I'm sorry guys, this is too difficult for the stream. Let me try to zoom in on my own spreadsheet. View, zoom. Okay, I think this will be good. Is this zoomed in? Yeah. All right, so this is my own spreadsheet where I actually make the stuff. Again, you can download this, hopefully read it okay. Let me know if it's not available in, or in good form. On my website as well, it'll be up in a second. But floating, least controlled, pegged, most controlled, and managed is like some semi-control. Okay, so this is the shakeup of the top 50 currencies that I have in this group. You see that if you look at countries and territories, you got 109 of them that use these currencies in some pegged form or managed form that are influenced by these currencies, the top 50, okay? 30 countries use these directly. No other currency, like, and it's mostly the dollar. They're just using the dollar. And then this is remaining in my survey. You get to a total of 217 countries or 146 currencies. So there's a lot of riffraff even down here. Like even the East Caribbean dollar doesn't make my top 50. But it just shows, you know, it's big Pareto stuff, Pareto distributions here. I have a database that goes to something close to 250 countries and territories. So there's about 30 that I could still fill in. The IMF does not do it at all. That's even less than this. So I've filled out this a little bit more on myself. So I guess I could get to maybe 250 countries and territories. There are like 190 UN countries in the world. Anyway, this small stuff doesn't really matter too much, these numbers. But if you're curious, this will show you really how powerful the top 50 countries are, top 50 currencies are. So this is an interesting question from Jimi Hendrix. Yes, they're not going to do Bitcoin and gold for a long time because they wouldn't be able to understand the exchange rate risk. They'll stick with treasuries for a long time. Tether is indeed one of the best companies in the world. One of the most, you know, all you have to do is basically take your spread. So it's incredible. This is going to stick with treasuries for a long time. Again, further reason why I just see the system continuing because there's still so much yield to be generated here. And even though, as you said, Tether and stablecoins being the 10th largest holder of treasuries, that's such a small market cap still. A couple hundred billion. They're not even to 200 billion yet. 150 billion or something, right? So Stablecoins themselves have a long way to grow. But it's also important just to, if you want to go back to this chart to describe what stablecoins are. They don't fit here at all. So stablecoins are going to be way outside of this money supply. This is the base money supply. Totals 26 trillion. Stablecoins are like a money market fund. It's a balance that on the one side the issuer issues the coin, on the other side they hold the asset that generates them income, obviously the US Treasury. So that's a huge market. It's obviously huge. I don't think it's going away anytime soon. But it's just different than this. This is the core of the system money. Stablecoins are not. They are whatever people want to use them for. If they like the short-term volatility, safe haven, right? Meaning Bitcoin is more volatile short-term, obviously, than stablecoins, even long-term. If they like that short-term security, go into stablecoin, whatever. But that's in the world of money market funds. So I can show you here again if I pull up my total money supply. Just here. Aloha, NGU Technology. Never been to Hawaii. Would love to go to Waikiki. Would be amazing. Sorry. I need to get better with my questions on the fly and pulling it up. But again, this is base money. This is the core of the system. There's nothing else. You can't go deeper than this. This is the money. This is the actual money that would be compared to Bitcoin. And then I'll show you. God bless it. Slow to update. Might have to wait on it. Here it is. All right. Switching back 1 second. Okay, so here is just US now, but this is what we're talking about. If we want to talk about where stable coins go. So the monetary base, as I was talking about, is the safe, which is a negative because it's only in banks, and the public can't hold it. What the public can hold is the positive number and plus the zero. Okay, so that's the 5.67 trillion. This is as of December 2024. Is way late lagging indicator. M3, which is not published by the Federal Reserve anymore. You got to go through all the data. $35 trillion. Okay, this is just US. M1 is here, all right, about 10 trillion. And M2 is, I don't know, 8 trillion less, let's say, than 35 trillion. I don't have it on this chart, but M2 itself, which everybody likes to talk about because that's the only thing that's published these days from the Federal Reserve, is 20, whatever it is, 27, 28 trillion. Stablecoins will go somewhere up here in the stack, way up here. It's It's a money market fund. You could actually put it in M2 as well. The difference between M2 and M3 is M2 is retail, sort of less liquid retail instruments, or less regulated. Sometimes not less liquid, sometimes less liquid, because time deposits go in M2 and M3 as well. But retail is M2, institutional is M3. It's insane that the Federal Reserve does not publish M3 anymore. It's not helpful. And everybody who always posts something about Bitcoin versus M2, you can do it, but it's not an analogous apples to apples money supply. So just to point that out. And it's another reason why I think this number is going to still go way up. The people that talk about global liquidity, they're usually talking about M2, although you should do M3, but nobody has an M3. I have it, but it's delayed and it's slow, and it doesn't even, this doesn't even have euro dollars in it. It's a huge money supply. But the stuff that is really only analogous with Bitcoin, you got to take away M3, take away M1, and this is what it is. You add these two numbers together. And all the leverage, because this is outside of banks, this M0, so all the leverage is actually here. It's only on this 3.5 trillion in the United States. And as I said on the report, the bank reserves worldwide total this much. So this is all the leverage in the world, really. This is not really leveraged, right? Currency, like 5% of this might be leveraged. 5% of this is actually in banks, like sitting in a bank vault. But it's not leveraged. It is a part of the economy. It's part of, like, it's sitting in grocery stores and department stores. And it is an asset on their book, but usually the asset is like petty cash. You don't leverage that on a business books, typically. It's just for the circular economy. So that's 9.3 trillion. All right. But what is leveraged is this. Is the 17 trillion. It would be good to have a global M3, but I just don't have it yet. I don't have it yet. So stable coins, money market funds, repurchase agreements, all of these instruments that are like quasi money, they call them quasi money actually, is that's way up the stack in M2, M3. Uh, Jimmy, I just looked this up. Tether is one of the largest Bitcoin holders. Yes, it is, but that's way smaller compared to the outstanding dollar exposure. So whatever it is, 140, 130 billion of Tether coins, they have like $8 billion worth of Bitcoin. The rest is bonds. So that's what I mean there as far as exposure. Of course, it's great to hold Bitcoin, but you got to be careful about exchange rate risks for a business like that, because if Bitcoin goes south for 2 years, and you got to run your operations, you could probably run them now because anyway, there's just so much wealth in the crypto tether space. I mean, people have a big stash of bitcoins that they could sell off or something, but that's not how the business typically works. Basically, you just want to issue the coin, uh, buy the treasury, take the profit on the interest, and go golfing by 3 o'clock or whatever. It is an insanely good business model for sure, for sure. But it's not the Bitcoin that Tether holds, even though they're a huge holder, is not a core component of their stablecoin business. And Trump is gonna start a stablecoin, maybe. I mean, he's got Lutnick in there in the administration to tell him how good it is. So that's really it. I mean, as far as the report goes, I'll pull up the ultimate again, which this is what it comes down to. Is let's put it on log. Let's take this away. Remember, we talked about this a lot. I'm sorry for the repeat viewers here. Even the crazy stuff, which was here, this was the crazy times. We went from 20 trillion. Sorry. This includes gold, so I always confuse it. This includes gold, silver, and the unbacked fiat money. So we went from 27 trillion up to 39 trillion. All right, and most of that was fiat money growing. Gold was not growing that much during the time. And we went back to 34 trillion. It's still on log scale. It looks like a blip, right? I mean, the trend is exponential. But then back it up for Bitcoin, we can see that the trend is not exponential. So you put these two together, and this is where I think you get the real dominance index. Something about 5% right now, based on the $2 trillion market cap, 4.7, 4.8%. And my fully refined efforts will say about 2043 for a cross. I don't think so at all. I mean, gold is high. Let's put the... But I mean, there's so many successful traders that have been hard money enthusiasts, like Jim Rogers, Peter Schiff. He's not a trader, he's more of a broker, but Jim Rogers, I mean, a long-term investor. Who's the guy from Mark Faber, lives in Thailand. We actually interviewed him. You can find it on our feed. He's a hard money guy. Hasn't really gotten Bitcoin, I think, until late. Where's price gold? But there's no problem swinging between physical cash, physical gold, and physical Bitcoin, in my mind. Here's gold. It's high. It's not all-time high, but it's close. So this is only as of March. Again, this is why this stuff is not on my website. I need to re-update these all the time when I show them. But we're at like $3,500, $3,700 gold now, right? Whatever it is. Sorry, 33.5. So we're a little bit higher. 37 is a 97.5 percentile. It's hot. It's certainly very, very hot. And the trend is not as nice, right? I mean, you can see it's just not as beautifully repetitive as what Bitcoin's power trend is. It's a big market, maybe a manipulated market. At least manipulated over the short term. There was this silver guy who used to say you can manipulate gold over the short term, not over the long term. I think that's true. But, if you were a gold bug here and you thought you made it and you had to wait 20 years to start again, and even here, if you bought here in 2011 at this $2,000 top, you'd have to wait 14 years to get back up. I mean, okay, it was back up again in 2020, but like to really run, it didn't start to run until, a year ago, year and a half ago. Here's it at 2000 a year and a half ago. So we're lucky to have Bitcoin. That's all I can say. I continue to fall back on how lucky we are to have this asset that can compete against just the grind higher in exponential terms that fiat money does. I saw a comment that Adam Back, who's a good dude. I've spoken to him often at conferences, and we've had him on our show. He was not a believer in the power curve, so I'll have to talk to him next time I see it, see if we can break it down more. What do we got here? They invest surplus into Bitcoin as Bitcoin rises will be a larger part of the asset base. Yeah, sure. It's great to hold Bitcoin. It is for sure. But you can't be in the business model of a dollar-based asset with Bitcoin as your base even. It's just not prudent. It's not prudent from a foreign exchange rate risk standpoint. But it's like the best business in the world. I mean, issuing a token, taking the spread is great. And they were the first to market, right? There are a lot of money market funds that do the exact same thing as Tether. It's just harder to hold a money market fund. You got to set up a brokerage account. You got to transfer your money into the bank, from the bank to the brokerage. Every time you sell stock with your broker and hold cash, you're holding a money market fund. You're not holding a dollar-based bank deposit. And Tether just obliterated that model. Somewhere around here, they started. So it's great for them. Super early into market. Bitcoin was 0.3% of the monetary base, super early into that market. Yes, it does. I'll be the first one to tell you. It is not easy. Anyway, that's the report. It's full resolution pics here, but they probably will be shrunk down. I'll get them up on my website soon. I guess these are the two tables that might be interesting if you want to download or print. They're like mega tables. Yeah. Yeah, true. I mean, the news cycle can just throw you for a loop, right? I mean, you can panic buy and then panic sell just based on the couple Wall Street Journal or Bloomberg headlines. We are definitely in a good tailwind spot, even if I might not like the way the administration postures on other issues. And, we'll see how it all shakes out with their separation of power versus their private business entities. But that's a United States thing. I think in general, you look at Bitcoin treasuries, which is another great site, right? Check it out. Our friend Novak's website. Like this is obviously not going down. 3.4 million in Bitcoin treasuries. Huge. Yeah, I don't I don't speak to him. I can tell you people at the Baltic Honey Badger don't speak to him. Uh, that's a these are highly sad and arrogant views. I mean, Ukrainians are fighting for their freedom, so that's all there is to it for me. Russians can get the fuck out and work on their own society. I don't follow him or really haven't paid attention to him in a long time, to be honest. Yeah. Yeah. If you want to follow, you know, the resistance, the Russian resistance, uh, sometimes we like to call them the good Russians. I would recommend Vladimir Kara-Murza. He was just released from prison on a major swap. Russia releases good, decent people that they arrested for no reason. The U.S. releases bad, murderous killers, and also Norway was a part of that, I believe, and maybe Denmark had some. Uh, Germany, I guess, and Norway had some Russian killers that were traded for people like Vladimir Kara-Murza, who were political prisoners, and he's already been poisoned twice. So I would follow him. As far as Russian dissent, as far as Russian, uh, democratic visions, I follow a lot of Ukrainian news and stuff, and you can imagine that even the liberal Russians or the good Russians, they're not even held in that high regard by Ukrainians. Obviously, Ukrainians are pretty angry about any Russian, but you get into this whole thing about a person's ethnicity versus their views. I'm not trying to go there. Try to keep it pretty just fixed on the basic issues, but I can certainly understand the frustration that Ukrainians have in general with people that let a dictator like Putin run them for 25 years. Uh, but I think we should have a big tent for sure. I mean, there are plenty of good Russians out there, and I follow them. Yeah. I think that was even the case of the original hodler. You guys remember the post from Bitcoin Talk? The guy that wrote, I am hodling instead of holding. And I believe that was even the case for him. And he was even earlier leaving, I think. I think he left in the crypto winter. I think. But yeah, this is a true fact for sure, Roman. Yeah, Bill Browder is very good friends with Kara Morza, and I think they're great people for liberty generally, and I hope that Russia will find a social, not a social, but a democratic leader. And there's all sorts of people out there. It's not correct just to say that every Russian is a bad imperialist. But tell that to Ukrainians. It's pretty difficult at the moment. Yeah, yeah, you'll hear it. Yeah, Fink is very hardcore. I like him a lot. I like his show, a great show, Silicon Curtain. If you haven't heard of it, Silicon Curtain. Great interviews on Ukraine and people fighting for freedom there. But he's. I'm not going to argue. I'm not going to argue with either side, to be honest. As far as moderate, holding moderate Russians in good regard versus let's just be against the entire uh, Russian enterprise until they can fix their country. Um, I can understand Ukrainians' anger, but um, you know, we're going to need these moderate Russians for sure at some point. Yeah, Andreas was great, and Ver was great as well. I mean, he was all over the world. He just got really taken into the whole Bitcoin Cash project. Yes, he unorange pilled himself. Yeah. Oh, it's going to be challenging for sure. They're already doing it. North Korea's doing it. They've been talking about it. Russia's very angry about their doltish move of invading a country while your foreign currency reserves are not locked up in your own brokerages. By the way, we say foreign currency reserves. A big portion of that is on the other side of the monetary base, right? So um, I don't remember the exact amounts, but we go back here. So this is take away the gold. Let's just look at let's look at the smaller issues. Actually, the big four. So the big four mostly hold their own bonds. Okay, so the United States holds U.S. bonds. Japan, uh, what is it called? JGBs, Japanese government bonds, Euro bonds. China holds all three. So China's a unique one. That's why China's like kind of a managed currency. But for the smaller issuers, it is true that a huge portion of these central banks hold what they call foreign currency reserves, and that is bonds issued in a currency that is not their own. UK is a lot of gilt as well, but Switzerland can have Facebook stock on their assets. Japan does that as well. But anyway, it's not the biggest portion of these balance sheets typically, but it is a lot. In Russia, it was Russia's total balance sheet is probably 600 billion, and 300 billion of the assets were foreign currency reserves, dollars and euros based bonds. So the long-winded answer to that, Dad, is they are pissed that their foreign currency reserves are held, as they should be for their criminal act. But they're going to get into Bitcoin. I mean, if they're not already, I know that they're already trying to just reserve that base money. It is an equalizer. Bitcoin is an equalizer. Yeah. Bitcoin turned out to be a green coin. It's amazing. Okay, guys, I got even more things to get to today, but I just wanted to get this out because it was published. Normally, I publish them on, like I said, East Coast American time. Why not do it on European time since more European than American, it seems, these days? Please share it if you can. Like, subscribe. Uh, website here, BTC Pay here. I think this is going to be my shtick now. I'm going to say I'm a newsletter grade research. Hopefully, hopefully newsletter grade research that's free to everyone, no subscription. Just if you can drop any stats here, it's much appreciated. Much, much appreciated. Okay, guys, I got to run. I did want to update on Ukraine, by the way, on all these numbers. We're going to get into the million casualties. But yeah, thank you for checking in. Thank you for watching wherever you are, YouTube or Twitter. Yeah, it's bad, man. It's like automatic censorship. I'm not. What is it? Just because I'm talking about Bitcoin? I'm not talking about bad stuff. Twitter is easier. If you watch it on Twitter, it's not censored. But I don't think you can get updates. Or can you schedule updates on Twitter? Maybe you can. Don't know. Don't know. Notifications, I mean. Thank you, guys. Thank you. Started on Twitch as well. If anybody's on Twitch, we're streaming there. All right. Good, Anderson. Appreciate it. All right. Thank you, guys. We'll chat tomorrow. Have a good day.